Welcome to Man in America, a voice of reason in a world gone mad. I love looking at the intersection of geopolitics, current events, and the economy, and looking at, okay, what's happening with the financial markets? What are gold and silver doing? How does that tie into a looming threat of World War III or riots across the nation? And if you look at what's happening right now, and which we'll be getting into deep in today's show with my guest, Collin Plume, the markets and a lot of different aspects of our society are telling us, hey, everything's normal, everything's great, like we're headed up and up and up. But if you actually look at the reality of how a lot of people are living in America, it's not the case. It's not like we're living in some golden age where everyone's just making tons of money and taxes are really low. People are struggling. Inflation is real. I mean, it's crazy to me that I'll go buy something, I'll go buy a part for, my tractor or buy some, farm thing for my goats. And I look at this, I'm like, how is this, this metal cage $200? Like this should have been $40. It probably was $40 like 8 years ago. And so all these lies that we're being fed about how good things are, that's just it. They're lies. And I'm not sure about you, but there's just this part of me that just senses that this all has to unravel at some point. And maybe it's this summer, maybe it's the fall, maybe it's next spring. I don't know. But it's like the whole system, it's like this balloon that keeps getting blown up and blown up and blown up. And everyone's waiting. As it gets tighter, everyone's like, okay, when's it going to pop? When's it going to pop? And then it pops. And so what's interesting though is we've had a lot of like major players in banking and finance over the past week or two giving like very serious warnings, like, Jamie Dimon, CEO of Chase, Ray Dalio, they're coming out and they're warning us about the bond market and what's to come. And so in the show today with Collin, we're going to be looking at like a snapshot of where things are right now, look at some of the warnings and analyze some of these messages that have come out from, some of these CEOs and significant players in the financial industry, but also looking at why is silver on such a run? Silver is right now it's at $36, $37 an ounce. Whereas, gosh, I remember, just a couple of months ago, it seemed that it was barely getting to 30. And so, but there's a lot of experts that are saying it's going to keep going up and up. And like, what does that mean? Right? What does all this mean for us? And so I hope you enjoy this interview. It's going to be good. We have a lot of good information, some charts to show you. And just a reminder that every show that I do is done as a podcast as well as a video form. So if you prefer to listen, just go to your favorite podcast app, search for Man in America. You'll find me on there. And if you want to leave a positive review, especially Apple Podcasts, like with those reviews on there, really help us to reach more people. So I appreciate that. So let's go and dive into your interview with Collin Plume. Collin, it's great to have you back on the show, man. Thank you so much for joining us today.
Seth, good to be here. A lot of exciting things happening, and not the metals we always talk about, which we'll get into later. So I'm excited to talk to you about that and dive in a little bit.
Yeah, it's just crazy how it's almost like every day now there's a new thing in the news cycle that just consumes everything. I mean, I can't even remember 5 days ago. It's like, okay, what was the trending thing 5 days ago? We went through Palantir, and then Trump and Musk were fighting, and that was all everyone was talking about. Then we had the riots breaking out. Now we've got June 14th. They've got this, kind of the summer of love inverted with riots planned all over the country. And I'm not sure about what your sense is, but my overall gut feeling is that there's a lot of chaos coming. It's like America is a giant bag of hornets that's been shaken up and shaken up and shaken up, and now it's getting opened up, and it's all pouring out. But maybe I'm just a little bit pessimistic. What do you think?
No, I mean, I was watching a clip of the riots last night, and there's a newscaster in LA, and the camera is showing just 5 cars on fire, burning. And the newscaster is like basically saying the kind of verbatim, not verbatim, but like the gist of what they were saying is that, hey, there's a lot of protesters there. The police should stay out of it. They're just peaceful protesters. That was sort of and it was like maybe if the video was showing some peaceful protesters, it would have made sense. But and maybe they're maybe there is peaceful protesters there. I don't know, but it was very strange that they're watching these cars, multiple cars on fire, and saying, and basically he was saying like the police shouldn't go in. But it was just the weird disconnect I think that we're seeing out there is like there people are trying to say that there isn't things happening, but they are happening. And I just was in awe of these of some of the comments that I'm seeing out there. And I think that's really the disconnect also. Like you see it so much in the news and so much in the financial news. You have this disconnect between like what's happening, like the stock market, where it's at today. It doesn't equate to earnings. It doesn't equate to what they expect is going to happen this summer. It doesn't equate to what I'm seeing on the ground. Yet you see prices, um, at this all-time high. Yet I know for a fact I've told to multiple business owners that are laying people off, that are cutting spending, that are just like trying to lean out, and they're not growing. And yet you see, yeah, 42,917 today. It just doesn't. It's like watching a sports match where no one's scoring, and the announcers are saying that this is one of the highest scoring games there is. It doesn't make sense right now.
That's it too. Because it was funny because the what I was kind of mentioning about just the chaos, the riots, all of the terrorists and Chinese troops that everything that are already inside of our border, and just all this tension building. But the same thing is reflected in the markets and with the overall economy, because you've got Trump coming out and saying, "Oh, we're stopping inflation," and they're telling us, "Look at the stock market's at all time high." But you as you mentioned, you're talking to these business owners, and it's like they're not seeing that. Like most people I talk to, they're struggling to pay for groceries. They're behind on their bills. Credit card usage is at all time high. Like the amount of
Correct.
savings that Americans have is nearing all time lows. And it just seems like there's just these two worlds happening, and there's reality, and reality isn't all negative, but like the actual truth of reality is that it seems like there's multiple ticking time bombs. Yet the picture that we're being given is it's a beautiful sunny day. Here's your ice
Sure.
cream cone. Smile for the
Yes.
camera. It's just there's a lot of weird stuff going on.
Well, and it's so much a confidence game, right? I mean, the stock market is like if you look at the multiples, and you look at most of the indexes, is the stock market is completely overvalued. It doesn't make sense at the prices. So, but if you're someone that's wants to continue this growth and you want to be in the story, obviously you're going to paint the best picture you possibly can. And we've seen it in many different markets. We've seen it in real estate. You saw it in 2008, 2009, where they tried to continue to make it seem like it's a great thing. I think today there's a lot of that where they're trying to make things seem a little bit better. Obviously, they're trying to paint a really rosy picture because if there's just less and less confidence, that's when people sell. That's when they sell their stocks. That's what they sell. I mean, they're trying to sell their homes. I mean, the amount of homes right now that are on the market, the amount of sellers relative to buyers is a number that we've never seen in history. We've never seen this. So, but if you're on the side where you need to profit on, keeping the game going, the shell game going, you're obviously going to continue this story. So, but you see the guys, Ray Dalio and all these guys really talking about what's in the math. They're looking at the actual fundamentals. And then I think that's what we're going to talk about today. What are the actual fundamentals of what's happening in the economy? And that's really what I look at. And I think the fundamentals are showing a much different story.
Oh, absolutely. Well, so I've got two quick videos I want to play. One is Jamie Dimon. Obviously, he's the CEO of Chase, right? That's his. He's
Yeah.
probably maybe he's chairman. I'm not sure, but CEO of Chase. So here's him. This is about a week and a half ago. But it's 22 seconds. But I'll play this twice because this is really important. When you have Jamie Dimon coming out and talking like this about the bond market, it's very, very significant. I'll play this real quick.
You are going to see a crack in the bond market. Okay? It is going to happen. And I tell this to my regulators, some of who are in this room, I'm telling you it's going to happen, and you're going to panic. I'm not going to panic. We'll be fine. We'll probably make more money, and then some of my friends will tell me that we like crises because it's good for JP Morgan Chase. No, you are going to see a crack in the bond market. Okay?
Yeah. I mean, in essence, what he's saying is like, there's an opportunity here. He's saying that bonds still have more room to go up in terms of there's going to be less buyers, right? I mean, that's in essence what he's saying. We saw this a few weeks ago when the Treasury came out and tried to sell a lot of bonds and they couldn't, and then the Fed came in and bought those bonds. So he's basically saying, he's just looking at the data, right? He's just looking at the data saying the bond market's going to have problems. The only reason the bond market has problems is because there's no buyers. That's the only reason there could be a crack. He doesn't want to say it directly because he doesn't want to create panic, but that is what he's saying. He's saying that there's going to be not enough buyers. We obviously need buyers of our debt to keep everything going. And he's saying that the buyers are going to dry up. And that's why there's going to be some panic out there. And people are going to get hurt. But he said it, we're going to make money. And it's interesting coming from a bank. I wonder, the Basel III laws are coming into effect in a few weeks here, right? They're going to have to buy more gold, physical gold. So, they're probably just going to move away from bonds for a while and let rates go up, and then they'll buy bonds at a higher rate. So it sounds like to me they're not buyers of bonds at this point. They're going to let things they're going to let the market correct itself a little bit, and they're going to wait for opportunities. And that's quite scary if you think about it. I mean, treasuries are in the high fours. The fact that he thinks that there's going to be a crack means that things are going to go higher, which means there's just not enough confidence in our dollar. There's not enough confidence in our markets right now. And there's a real concern about our debt. And so people are waiting for things to shake out a little bit.
Exactly. I'll play the second video. This is Ray Dalio talking. It's a minute 36, kind of highlighting some of the similar things. But let's listen to this really quickly.
Watch the bond market. The bond market is the basis, it's the backbone of all markets. It is the risk-free, meaning default-free, probably default-free, interest rate that determines what all asset returns are going to be. And when there is a breakdown of the supply-demand picture for the bond market, you see a certain type of market action. You see long rates rising relative to short rates. You see the currency go down. You see gold go up because there's a movement out of that bond market because there's a supply and demand imbalance. When that happens, that raises interest rates, and it puts the Federal Reserve and other central banks in a bind. That supply-demand imbalance, in order to deal with that, when there's not enough demand, they're torn between allowing interest rates to rise and have the negative effect that that has on markets and the economy, or coming in and printing money, essentially, and buying bonds in order to provide the demand for those bonds that aren't there, and that produces inflationary pressures.
So a few different questions for you. So if Ray Dalio is saying that the bond market is the backbone, right? It's the foundation of the markets, and Jamie Dimon is saying there's going to be a crack in this market. And what we're seeing is that less countries and banks are buying bonds. They're actually buying more precious metals, which seems to signify a larger shift and a move away from the US dollar as the global reserve currency and a move towards precious metals, specifically gold, especially when you tie in Basel III. Is that what you're seeing? And can you also just explain a little bit extrapolate on why the bond market is so important and what the bigger picture of this means for us?
Yeah. Well, I think I always look at history, and I look at history in terms of timelines. And I think that let's just look back 5 years from now. And the 10-year treasury was probably trading in the 2% range and low twos. And people bought that debt. People bought that 2%. That was sort of a healthy environment. Now, if you think about it to today, if people bought it at 2% and they were buying it, and now the fact that no one will buy it in the high fours, what does that say about our economy? It says our economy, there's going to be there's going to be a lot of opportunities out there, right? Because if people were buying debt at 2% and okay with that return, now the fact that they won't buy it in the high fours, what does that say? It says that either like they're worried about the stock market, there's going to be opportunities there, there's going to be a pullback, people want liquidity. I think that's the thing that people don't realize is that like,
So you've heard me talk about macrobiotic seasonal eating, how aligning your diet with the seasons and eating real, local food can transform your health. But what do you do when your body's out of balance? That is where sweet wheat comes in. Sweet wheat is 100% certified organic wheatgrass juice powder, cold juice and freeze-dried to retain all the live enzymes and nutrients that your body craves, especially when you're dealing with too much acidity from processed food, sugar, or just stress. Just one scoop gives you the alkalizing power of over 1.5 pounds of vegetables, helping to reduce inflammation, improve digestion, support detox, and balance your body's pH all the way that nature intended. It's vegan, non-GMO, gluten-free, and made right here in the good old US of A. So it's safe for all ages, even for kids and pets. You can get sweet wheat from Brightcore for 25% off with the code MANINAMERICA at mybrightcore.com/maninamerica or call 888-575-6488 for up to 50% off and free shipping, but only when you call. And if you want to dive deeper into this topic and understand how sweet wheat supports macrobiotic principles, go watch my recent full interview with the Brightcore founder, Kim Bright. It'll change the way you think about your food. Just click the link below to check it out.
In theory, like a high 4% return, if you took out the last 2 to 3 years, you went back 20 years, anybody out there would have bought that debt. They would have bought it at high fours. But now they don't because you want liquidity. You don't want to have your money tied up because there's going to be massive opportunities. That's the only reason the big money in the world doesn't buy it is because they believe that there's going to be a sell-off in real estate and there's going to be a sell-off in the equity market because you want your cash. If you buy that 4% note and you're locked in for 10 years, you have no access to that capital. And so that's the reason that all the money's on the sidelines. They're like, why would I jump in right now? It's like for you, Seth, if you go, let's say your house is $500,000 and you know that there's going to be a big correction and then you could buy your neighbor's house and rent it out and it's going to drop 30%. You could buy that same house for $350,000. And I think we're going to see some corrections like that. I think the market every list price for real estate is all wrong. No one's selling at those prices. Nobody could afford it. So if you knew you could buy the house across the street as a rental property at 35% lower, are you going to put your money in a 10-year treasury and make 4.8%?
No,
right?
No way.
Right? I mean, that's what the smart money is doing. And that's why when I talk to people today, like having liquidity available and gold and silver and platinum, these are liquid assets. You're not stuck. So I think that that's what the market is saying is that they want to see more corrections. They want to see more pullbacks. They're waiting for the stock. And I'm invested in the stock market too, but I know there's going to be a big correction and I know I'm going to wait. And I don't know if it's going to take 6 months or 12 months or 18. I don't know what's going to happen, but there's going to be a pullback. It's going to happen. Things aren't going to continue the way that they are. So the markets, the smart money is saying there's still more pain coming. There's still going to be more opportunities. That's what Ray Dalio is saying. He's saying gold and silver are going to go up because if you think about it from a central bank point of view, like they can park the money there for a while and just wait. If you see it from an institutional bank point of view, like they can just buy gold and just wait and just ride things out. And I think that there's an opportunity to be really patient right now because there will be opportunities in those sectors. And that's why Jamie Dimon said, like, we're going to make more money, right? He's just saying, I'm not going to buy it. I'm going to move into things and make more money. Now, he has to buy something. So they are going to buy gold. I can promise you that. China is buying more gold. They're trying to underreport how much gold they're buying. They're buying tremendous amounts of gold. So they are buying something, but they're just not going to buy the traditional real estate and equities, and they're going to stay out of the bond market. It's just not the right time for them. Even at rates in the bond market that seem to someone that like maybe hasn't looked at it too closely, it seems quite attractive. But Seth, like it's all about when you buy something, right? The buy is the key. And they're basically, these big two massive investors are saying it's not the time to buy those assets.
So you made an interesting point there. And one aspect of this is numbers don't lie. And
Right.
like watch what they do, not what they say. So when you mention how they're kind of building these large liquid positions, right? Large cash positions. Like I did a quick check. So Berkshire Hathaway is currently holding a record high amount of cash, around $347 billion. Right. So they're at a record high, one of the most important investment firms in the world. They're at a record high for cash, right? So they're not taking that money and investing it in things. They're waiting, right? It's kind of the same thing as me having a bunch of seeds stored away for, or food in 5-gallon buckets. It's like I'm just waiting, and when the time is right, that stuff will be worth its weight in gold. And so, so you think that like Warren Buffett, Jamie Dimon, Ray Dalio, what they're all telling us is the same thing: is that there will be blood in the streets in the financial markets, but they're waiting until, because that's when they're going to strike. So whereas Jim Cramer is probably telling the average person, or your TD investment advisor is saying, oh, we should put money into the Magnificent Seven. We should put some money into the bonds and this. The real people are contracting from the markets, building up cash positions, so that way, when the markets correct, which it seems like they're all indicating that that's going to happen in a very big way, they've got that huge cash position to come in and double, triple, quadruple their money.
Your most stock people today, most advisors don't make any money if you sit in cash. They only make money when you're in the market. So they have an inherent goal to keep you in the market, right? We talked about a lot of this, is like stockbrokers 35, 40 years ago would make money when you bought a stock and that stock made money. It's not like that today. They get a management fee, but that management fee is only going to get paid to them if you're in the mutual funds or the stocks or whatever they recommend. So they inherently want you to stick into that and stay the course, even though the data shows that there could be a massive correction. For them, like, it doesn't matter. They every month they're getting a fee. They're getting a fee. They're getting a fee. They don't have, even though like in the big picture, if they were really smart, they would tell you to go into cash or go into gold or go into silver or go into platinum, because you're going to make more money. Ultimately, every financial advisor, the more money you make over the long term, they're going to make more money too, because they get a percentage of that. But they're just not willing to change course and say, hey, maybe it's a time to take some chips off the table, because they know that maybe they could lose it, or maybe they lose you as a client. But at the end of the day, I think what these investors are saying is that this is a wait opportunity for the equity markets. And so if you're really smart and you're really reading things, you're not going to keep a lot of the money that you have liquid that you can sell and move out of. You're going to move into a cash position or a gold position, because there's going to be a bigger opportunity down the road. And I believe that that's true, and I believe that's what these big investors are saying. I mean, think about Warren Buffett. He doesn't need money. The only thing he lives by is wins. That's the only thing that gets Warren Buffett excited, is wins. And for him, the wins in the stock market are not there, so he's sitting in cash.
It's just kind of thinking, as I pulled up the stock price earlier, it's at what, 43,000, like that for, the Dow Jones. It's almost like one perspective is that now is the perfect time to pull out of that. It's like, okay, you're sitting at an all-time high. It's like, great, time to pull your money, follow what they're doing. Don't like keep your money in there thinking, well, maybe it's going to go 5% more the next month. It's like, as long as it's risky as long as it keeps going. It's riskier and riskier.
Yeah, I think it's right. And also, if we are correct and we see a 20 or 25% pullback, how long does it take for those things to recover? That's the thing that's really tough. And so, yeah, I mean, I think it's interesting, and I think you're seeing some of these industrial metals really start to take off. I mean, I think that's the story of today, of this year, is, our friend silver and our friend platinum are really, starting to perform, right? I mean, they're the talk of the town is silver. Silver broke 36. We were talking about, you and I are big silver buffs. Silver broke 36. Look at silver, up 43% over the last year.
Yeah, it's crazy.
22%. So basically, since the beginning of the year, silver's up 22%. And, this was the thing, it was that gold to silver ratio didn't make sense, right? We were above 100 to 1 gold to silver ratio before the last 3 months. And it doesn't make sense that it's at that ratio. It doesn't make sense. Like, every time it's been above 100 to 1, it's always gone below. Maybe it takes a few weeks, a month or two, but it doesn't stick at 100 to 1. So yeah, so you have silver just really taking off. You have a 9% surge just over the last few weeks, and we're seeing massive amounts of inflows in the ETF market. We're talking about 460 million in the ETF market is just an unbelievable amount of silver.
So explain what that means.
Yeah, it basically means is that on the stock market version of silver, or the ETF, it's just like an exchange traded fund is just like another way to buy silver. You're not buying the real thing, you're just buying a derivative of the real thing.
As it relates to the ratios, this is what I want you to talk about really quickly. So you mentioned that right now we were at 100 to 1, and now it's closing the gap, right? What is it, around 75 to 80 to 1, or where are the ratios at right now?
We're about 90 to 1 right now. I talk about this in my book, and actually I will say it's sort of wild, because we talked about silver price, and I was predicting this 36 price. We started talking about this in December of last year, and everyone's been joking with me about silver because I wrote the book about silver, and gold's going crazy. And then what happened to silver? Like, what did you do? And I just said, like, silver sometimes moves a little slower. It just doesn't, we saw it in 2009 to 2011. It really went nuclear, because they did quantitative easing at that point, right after the historic credit crunch, and the banks were going out of business, and all that bad debt that were out there, and everybody remembers. And I said, they're going to do quantitative easing again. They're going to have to, because nobody's going to buy our bonds, which is what we were talking about earlier. And they're going to have to stimulate the economy somehow. And as much as President Trump is talking about lowering rates, I don't think in this environment, even if he pushes on the Fed, it's going to be that easy to get rates down. At the end of the day, it's all about the 10-year. The 10-year, people have to trust. The way our 30-year mortgage is it's tied to the 10-year treasury. If people don't buy our 10-year treasury, which we talked about earlier, they're not buying, there's a crack in the armor. It doesn't matter if he pushes the Fed. So the only other way that you can stimulate from the Fed's point of view is doing like a quantitative easing. And I believe that they are going to do it. I think they're already secretly doing it. And so, it shows the Fed stopped buying tremendous amount of bonds for the last few years, and now they're going to have to start to buy in. So I think silver's story is really starting to unfold right now. And I think what's going to happen is you're going to see the big companies buy ETFs of silver, and then they're not going to feel comfortable with ETFs, because they did the same thing with gold, and then they wanted to get physical possession. So when you have that second call, when you have a huge company come in and go, okay, we have this ETF, but we actually want the contract, we want the silver, that sends another message to the market that, hey, like, we don't trust this contract. And that's what happened with gold. So I think history will repeat itself with silver. They'll try to call in these contracts. They're going to realize that they don't have as much silver as they say that they do. And then that's going to start a second wave of buying, because it creates panic. That's what happened in the London Bullion Exchange, right? Like, once they said, hey, I want that gold contract, and they realized they didn't have enough gold, the traders were like, wait a minute, maybe there's not enough gold there. And they really started to panic, and you saw this massive run. I think history will repeat itself with silver. So I think you have that one isolated incident that'll happen. I think the other thing that you look at with silver is just the amount of industrial uses of silver just continues to skyrocket. Like we've shown it. I talk about it a lot in my book, Silver is the New Oil. I give you all the reasons why I think silver is going to go crazy. And then I really dive into like some specific scenarios where silver could go hyperbolic. And so I think this year we will see if gold, even if gold doesn't move up $1, I think silver gets down to like a 70 or 72 to 1 ratio with gold. And that number looks like 46 and some change per ounce silver. And I think what'll also happen is I think with that kind of move, you're going to see a shortage of actual silver product. And so I think the nice thing about owning it in the physical too is like you'll get a premium. Let's say you wait and it hits $46. I think the coins and the bars and everything will get really expensive because it'll just be this massive rush. So I think it'll be a double win for investors because they'll get just the actual growth, and then they'll get the percentage above the spot price where like, I mean, I don't know if it'll go to COVID levels, but I mean, you remember with COVID, like Silver Eagles were trading at like $9 over the spot price. So if that happened again, you have silver at $46, and let's say the cost on a Silver Eagle is $54, it's like a double win, right? I don't think it'll go that crazy, but I think that you will see a premium in the products with that kind of massive run up. Because you're talking about for it to go from 36, 45 today, go up $10 in the next 6 months, which is what I think will happen. I mean, that's a massive surge. And I think the mints won't be able to keep up, the demand won't be able to keep, and I think it'll create this kind of hysteria in the silver market. So you're looking at a 36% increase, if I'm right. Plus, I think that the product price will actually go up even further.
And so between gold and silver and platinum, those are the three metals that I own. I've got some copper and some, things like that. They're just kind of small things. But I've personally probably focused more on gold, say the first part of the year, just seeing everything that was happening with gold, but I'm back to focusing more on silver. And silver has been really my main focus the past couple of years anyway, just because I just see that those ratios tell me it's like, if it's 100 to 1, meaning if gold's at 3,000, silver's at 30, 100 to 1. If it goes up, if it drops in that ratio, it's like there's so much room for silver. But for someone that is not sure about which metal to kind of allocate into, and someone is talking to you and say, Collin, what should I be focusing, buying, silver or gold or platinum? How would you recommend people to allocate?
If you've never have or acquired any gold, you should always have gold. I don't think there's any scenario that you don't have gold. You have to have some gold. It's the monetary metal that everybody owns. So you got to have some gold. But if you're just looking straight short-term profit potential, I think silver has got the biggest upside right now. The demand has been really high with us over the last 60 days. Obviously, I see the ETF market really taking off. And then if we see that quantitative easing scenario happen, I mean, even if silver goes to 46, like I'm predicting, it's still below its all-time high of 50. So it's not an unreasonable number for it to go to. Also, the other scenario too is we saw a lot of this, with GameStop and these short sellers. You see a lot of these guys that will jump, and they did it with silver too, is they'll jump into the silver market and you'll see a really big push over a short period of time. And I remember the GameStop buyers focused their attention on silver and they wanted to squeeze out a lot of these hedge funds and really kind of screw them over. And I saw silver go up, almost $3 over a weekend. So you can see that kind of push happen in the silver market. So I expect something to happen. It's not that I don't think gold will continue to go up. I do. But I think short term, it's really interesting. And then platinum has been actually quite interesting this year. Platinum, everyone's scratching their head about platinum, sitting at $950 for, a long time. It used to be more expensive than gold from when I started in the business. And then platinum this year has finally started to take off. I mean, and platinum is the most rare out of all three of those metals. It's if you look at, the analogy is if you look at an Olympic-sized swimming pool, so you have gold in 2.5 Olympic-sized swimming pools, the amount of gold above ground, platinum in that same scenario would be so little that it would basically just cover your feet in the Olympic-sized swimming pools. That's how little platinum there is above ground. So you're looking at, platinum really up, this year, about 20% this year, really starting to move up. And, it makes sense. I mean, it's a hard metal to find. It's used in catalytic converters and a bunch of other things. And I think the jewelry demand is going to push platinum even higher, because it's not going to, at some point, I have a lot of friends that are jewelers, and they're like, the demand for gold jewelry is starting to slow down a little bit just because of the price. But platinum is an equally good metal in many of those scenarios. For rings, for earrings, platinum is a good replacement. So if you're
it's better in many ways. 'Cause I used to be a jeweler, and platinum, it's harder, right? So like platinum lasts longer. Gold is very soft. You have to bring
soft,
it. You have to do a bunch of alloy mixes, but platinum was always the the premium metal, because I remember back, gosh, I forget how long ago it was. I remember when platinum was like almost $2,000 an ounce, maybe 10 years. I forget. Actually, I'll look on the 5-year. Actually, it's been quite some time since it was up that high. Yes, looking at this.
It was when I started in the business 16 years ago, it was more expensive than gold, and it was more expensive than gold for years. And then I think it started to break in like 2011 or 2012. I think gold started to outperform it. But I think the big picture is these industrial metals, silver and platinum, are starting to catch up a little bit, and gold went on its run. So I really like these two metals. I would say it should be probably a smaller amount of your portfolio into platinum. But I mean, listen, if platinum does what palladium does, remember palladium went on a massive run and broke over $4,000 an ounce because they started to use it more in catalytic converters. It became a really desirable metal. So there's these things that are happening, these undercurrent, these other metals that people aren't really, most people today would never even talk about platinum, probably wouldn't even talk about silver. But at the end of the day, it's all about percentage growth, right? As much as gold feels like you got to have some gold, and I recommend it. If things are right, we go through quantitative easing and silver goes up $10 from where it is today, and gold goes up 5 or 10% more this year, like you're going to do better. 36 to 46, the math is just there. So I like the opportunity. And I also think people are late to the story. Like, I think silver's moved kind of quick and no one's really talking about it yet, but they are going to talk. I think by the end of the summer, they are going to be talking about silver. It'll be in the zeitgeist of the stock, because I think it breaks 40 by the end of the summer. And then it's really, because that kind of growth is going to get into it. And then once it breaks 40, you'll see it all over the news, and then you'll just see a trigger. So much of what we discussed earlier, so much of it is confidence, right? And people going, wow, I missed out. I got to get silver. And I think that last push from 40 to 46 will push it through the last quarter of this year. And that's, it's not unusual for that to happen. I've seen it happen many times in my career. And so I just think it's a great metal. So people want to learn about silver, they can buy my book. It's on Amazon, or you can call us. And then we also have a 15-page shorter version of a platinum guide that we took information from the Platinum World Council and like really just can put it into like a concise way. So if you're interested, we obviously have gold guides. We have a ton of good information. So if anybody wants that information from us, they want to get access to the book, give us a call, and we can give you a code for Amazon, so you can get a discount on the book, or you can just go to Amazon and buy the book. And I was looking at my book on Amazon in the commodity section, Seth, and it's funny because gold was like, all the books in the top 100 are just talk about basically gold, crypto, and other trading things. I'm the only silver book in there. And I was like, it was going slow earlier in this year. In the last like 2 weeks, I think people see the price of silver and it's starting to pick up a little bit. So I find it kind of interesting, and it'll be interesting what happens over the summer if people start to catch like the silver train. But I'm really the only book in that top 100 that's like really just focused on silver. And
so if I'll pull up the website. So we've got a website, goldwithseth.com. theseth.com. If people have questions, I mean, let's just say if someone wants to say they're watching and they're saying, okay, yeah, you're right, Seth, stock market is all-time high. Now's the time to kind of pull that out and shift it. How easy do you make it if someone wants to move money over from either say like a stock or a trade account or an IRA or 401k? Is that all pretty seamless? Like you handle a lot of the legwork with that?
I mean, we do all the legwork. You'll have a representative that'll be your person that'll walk you through it. Plus we have the IRA team behind that person. So you'll have a few people that are helping you with the paperwork. Everything's streamlined through DocuSign now. Like you could have it all done. You could have the paperwork done in 5 minutes, and then we will go to work and set up your account at the custodian if you're doing an IRA. If you're doing a wire and you just want to get metals shipped, I mean, you can have that. That could be done in 10 minutes, and you could have metals in a week. We're shipping in a week right now, which we're really proud of. And we could store it for you if you want to have storage. So I think all of it is really easy and smooth. And I think that keep in mind is like with us, first of all, check out our reviews and, make sure that we're the company you want to go with. But I think if you call somebody and you build a relationship, that's really important in our space, because as the market starts to move up, you're going to want to have somebody to call, right? You're going to want to have somebody to talk to about these things. What we found is, doing our research in the precious metal space is like everybody sounds good up front. And then what happens in a year or what happens in 2 years or 3 years? Like, are they going to pick up your call? A lot of our competitors, the salesperson, like they just do the sale. They won't take your call ever again. We build relationships. My sales team is built in a different way in that they're going to stay with you for the life of your account. So you're going to call back, you're going to talk to that person again. And that's really important for me, that you have that consistency when you're dealing with somebody. And so I think it's important to know that this is a big, opportunity that we're presenting, but also like the relationships we build are really important to us, and we don't take it lightly. And we will take whatever amount, if you decide to invest with us, we're going to take it very serious. I take it very serious. So we will take care of you. It'll be a good environment. You'll be happy. And, I think our track record proves, 10 years in business, thousands of positive reviews. We treat people like how we want to be treated when you're going through this journey with us.
Which is important because it's not an easy space to navigate. So I'll pull up the website one last time. So it's goldwithseth.com. They can fill out the form on there, or the phone number is 626-654-1906. You guys you're fast. Shipping is fast, everything. And yeah, I mean, I would look at, it's like, okay, well, who are you taking your stock advice from? The TD advisor that gets a commission off of keeping you in stock, or are you following like, Warren Buffett or the central banks or these people? And it's like, I'm going to, follow what they're doing, not what they're telling me to do. It's like going to a doctor. Doctors, they're not going to, most doctors, they're on the payroll of big pharma. They're not going to say, hey, you know what? There's probably a weed growing in your backyard that you can make a tea out of that's going to help this. Of course, they're not going to say that, right? Because they're going to write you a script and they get one more bonus check for it. Thanks, Collin. It's always great speaking with you. I hear nothing but positive things about your team and the feedback that we get from what you guys do, and it's great to have you on board. And thank you for being part of what I'm doing too, because you've allowed me to maintain my independence and to keep pressing the gas on the gas pedal down. So thank you.
Thanks, Seth. Talk to you soon. Thanks so much.
Thanks, Collin. Here's the hard truth. Every 6 years, your dollar loses half its buying power. That means a $100,000 savings account today could feel like $50,000 by 2031. And you see it every time you fill up your tank, buy groceries, or pay the bills. Prices are up. Your dollar's down. But there's a simple way to protect the value of your savings with something real, something proven: gold. An asset that holds its value over time. And that's why I trust Noble Gold Investments. They make it simple to protect your savings with physical gold or silver. No high-pressure sales, no call centers, just honest guidance, one-on-one support, and transparent pricing. And right now, when you open a qualified account, Noble Gold will send you a free 10-ounce silver American flag bar as a thank you. So Head over to goldwithseth.com or call 626-654-1906 today to learn more. Again, that's goldwithseth.com or 626-654-1906. Don't just protect your wealth, preserve its power. Do you keep hearing more cases of your friends and family getting a life-threatening diagnosis of cancer? Or perhaps it's even happened to you? Well, the unfortunate reality is that turbo cancer is now a worldwide epidemic. But the question we should all be asking is, what can I do about it? Well, the good news is that there are therapies that are working and proven in thousands of clinical studies. So one study on PubMed found that breast cancer's growth rate dropped by 40% in only 24 hours after using red light therapy. Another study on prostate cancer found that 49% of the over 400 male participants went into remission with just one red light therapy session. A lymphoma cancer pilot study showed that 3 out of 3 of the patients became cancer-free. It sounds unbelievable, but it's true. And you can discover all this information and more in a special training program from investigative medical journalist Jonathan Otto, who will show you how you can use red light, including the specific wavelengths as proven by studies, for all different types of cancer, as well as tinnitus, weight loss, wrinkles, acne, dementia, cognitive function, depression, anxiety, long COVID, jab injuries, stem cell regeneration, lower back pain, sciatica, the whole array of autoimmune diseases, including thyroid disease, arthritis, lupus, and gut disorders, and so much more. In fact, you can get your own in-home red light therapy device risk-free, as you're completely covered by a 60-day money-back guarantee and a 3-year warranty. On top of that, we've got financing options so you can get it now and pay later. And the best thing, folks, is that this technology has become amazingly affordable. It's way less than you'd expect, with the smaller units costing only a couple $100. So just go to myredlight.com to make sure you don't miss out this free special training program and claim the extremely limited time bonus gifts and discounts, which include an additional 10% off with the coupon code SETH. Again, go to myredlight.com to get access to the free training. And if you make a purchase, make sure you use a promo code SETH, that's SETH, to get an additional 10% off the already heavily discounted red light therapy products.